So I'd like to start off by asking sort of your initial passion. So why are you passionate about ESG as a whole?
That's a good question. I think just in the comment before, I think we have a challenge. We have a big obstacle as the humanity to change massive problems on climate change, on society. And I think in my career, I've been very fortunate to be first an academic, so to think to many problems. There's been a Nobel Prize given to positive externalities. I think what we try to, on a theoretical standpoint, what we try to teach students to understand is how we can invest and also generate positive externalities. And I think that's theory, but what is interesting is in my professional career, I've seen that we can invest and do better. And I think ESG is all about this, or impact investing. We will hopefully discuss this, but if we can invest to generate good returns for investors, and in addition, generate these positive externalities, that's the objective. So that's, I think this is with the emergence of all the initiatives, the ESG initiatives, I think it's a fantastic opportunity, and hopefully we will manage to have the vast majority of investors, private or institutional, embracing this change. So that's an objective. I think we can make our little contribution, and this is a passion because we are at the beginning of something hopefully big. I fundamentally believe it's going to be big, and we want to do our positive contribution.
Yeah, definitely. And from that, would you say, obviously you started Green Blue Invest back in 2018. Was that driven by this passion for ESG, or was that because you felt there was a gap in the market that someone needs to take up and sort of take leadership within that area?
I think it's for all these reasons. And when you create a company, it's a combination of a lot of opportunities. The first one, you said it. I think obviously there is demand for ESG, but we felt we could, as said, make our contribution. We can change the world. We can make better investments. We can build a better finance, and that's this vision. It started with the Paris conference. In my career, we did several, me and my teams, or my former teams, we did several initiatives on creating sustainable products going back to 2010. And with the Paris conference, we saw really a change in the behavior of investors. We saw that people were starting to think that we can invest better while preserving the return. And then we saw a lot of initiatives, a lot of involvement, interest by many people. We saw some product performing, because if you go back a few years ago, there was always this bad perception that if it's sustainable, it underperforms. And suddenly people saw, oh, no, that's wrong. Actually, if you have a good ESG, if you have a good company, if you have a good board, a good CEO, a good culture, it reflects positively on the employees. And when I say employees, this is on the society. Because, for example, we're going to discuss that, but a well-governed company that has a good ESG culture, the employee turnover is close to zero. Imagine the friction cost when you have an employee turnover of 10, 20, 30%. So that's already this. The second thing is, what we hate is the hire and fire policy that we have in poorly governed companies. And imagine the social cost. When someone is fired, it's not only this person, this is his family, his friends. The social impact is huge. So there is a notion of a company as an impact on the society. And that's very important. And as we will, we want to demonstrate as well on obviously the environment.
Definitely. And you yourself, you're obviously very passionate about ESG. Would you say this is a sort of passion that's shared throughout the industry, or would you say you're currently slightly isolated in that way of thinking?
No, I think, thanks God, we have more and more people, and I think everybody in this conference is very much motivated by ESG. I think more and more people are joining the cause, and I think that's important. That's shared in the industry. Where I think the challenge is in the industry is today people realize, and when we say the industry, this is asset management and banking, people anticipate there will be a demand. The demand is still not there, or it's not very strong. And that's something where we need to work on. I was with, at the beginning of this year, I was with the head of products of a very major big global bank. And he told me, Pascal, we did a survey, so back in 2020, on our ultra high net worth clients, and only 2% are considering moving to ESG or moving most of their assets to ESG. So there is still a lot of work to do. But as I said, we see, me as a company, we doubled our client this year. We see more and more, and what I love is more and more clients have an ESG due diligence. It's not only a performance due diligence on the product, but they really try to assess whether it's good ESG. And even the most sophisticated one do a double due diligence. They do an ESG due diligence on the product, and they do an ESG due diligence on us, me and my partners, the company, just to say, we want to invest in ESG products that are managed by ESG companies. And we are 100% ESG. I didn't mention that. We just do ESG products. We believe we don't want to be conflicted. We just want to dream, get up, have lunch, think about ESG. That's our objective, is really to do that. We discuss about governance, but we do research and development on, I would say, on sincerity. Maybe to answer your question, what will be very important when you invest is in ESG product is to understand whether there is sincerity behind the product. So as an example, in another research program, we identify the companies that have patents in decarbonization. And that's very interesting because there are some companies that are very vocal about their effort about decarbonization. And then when you search the companies, they have no patents. So some of those examples. So, but I believe we have a good positive trend. We need more investors. That's just this. The more investors we have, the faster we will solve a lot of the problems.
So you mentioned then, especially a couple of years in the past, that a lot of people struggle to see sustainability as something that sustainability and growth as being compatible. So what would you say to those people that don't see the two as going hand in hand?
Well, I think we need to make a distinction between, I think there is always a misunderstanding. There is the notion of philanthropy. And in philanthropy, there is the notion really to donate to good projects. And there is the notion of ESG, impact investing, sustainability. You have many definitions where you will say, I want to invest to generate a return, because as an investor, I'm looking for a return. This is the objective for my clients. These are the objectives, because an investor has to generate positive return. That's a matter of fact. That's also the human nature. When you invest, you like to make a profit. Where it's important and where we manage to see the perception changes is you can invest for good returns and generate these positive externalities. And the positive externalities, maybe we go the direction to governance, which is our savoir-faire. We believe that our responsibility is to detect companies that have this approach of ESG. So when you invest in ESG, basically in an ESG fund like us, you invest in someone who will detect and select companies that are ESG in their DNA. And then when you want to be ESG in the DNA and continue to perform, what you should look at is who is at the steering wheel of the company to ensure that the performance continues to be there. And at the same time, the E and the S are positively addressed. And all these two comes together more as a culture, and a culture driven and almost dictated by the board, because in a company, the board is here. I don't want to be too academic, but in theory, the board is here to give the direction, to give the strategy, and the CEO and his management team are here to execute. So this is very, very important to understand how this board will define, transfer all these ESG values to have a combination of performance and positive E and positive S.
So from that, do you have any sort of leading examples of companies where you've seen this sort of governance take place and how they've made a positive change or impact?
Yeah, there are many. There is an example that is quite strong. This is a company in Finland. It's an oil and gas company originally, so that's even more interesting. It's Neste Oil. And what is interesting is in 2016, the board of Neste Oil had a big reflection, a big transition on the company, and they made the decision really to make almost transitions, but big initiatives to renewable energy. So the outcome of this has been complete, because on environment, if you want, Neste Oil, who used to be an oil and gas company, is today one of the leaders, maybe the leader in biofuel. So a very nice shift. You can get a sense of the employees to be proud of working for Neste Oil, because when you do better for the planet, that's also something where you get up in the morning and you're happy to go and work for this company. And then for the investors, you can look at the performance of the company. The stock price since 2016 has been multiplied by 4. And if you look at the oil and gas industry for the same period, I think the average has been flat to negative. So that's an example. We have other examples, but I think this is where we have this notion, I would say, of engagement. If you engage, if the board is engaged on all the values we mentioned before, I think the externalities are positive for everyone.
Yeah, and I think that's a really interesting example to take from the oil and gas industry, especially when, without naming any companies, there's certain companies I believe have these new targets and they're trying to portray themselves as the same as Neste in terms of making these sustainable changes, and they're not necessarily doing that in the background. And I think that moves nicely on to the next topic of greenscaping and how common you think that is within the industry. And you talked a lot about sincerity and how you can sort of look through and see through the glasses. So it is. So yeah, how common would you say greenscaping is within the asset management industry?
Yeah, that's an interesting question, because basically you mentioned sincerity, and behind your question, I read very well the notion, if you have 2 ESG products, how can we detect the good one and the greenwashed one? And I think, the first thing, in our discussion, yes, we would like to understand who is good and who is less good. But I think we should look at this transition in 2 waves. I think the first wave, it's important that the whole industry turns ESG. I think that you will have people that will be light, people that will be more profound. But at the end of the day, everybody has to make a transition. Some will make an impact, some a lesser impact. But at the end of the day, that's a good step. I would say that's the first wave, and it's happening. The second wave will be then to differentiate between, as said, sincere people and not sincere people. And I believe one way to look at this is who is trying to drive the change and who is trying just to respond to a demand or anticipate a demand. And just asking the question, and I would say probably the good question to ask to have this differentiation is to ask people, what is the purpose behind doing this product? And just asking this question, the answer will tell you a lot. Is there a purpose, a catalyst? You try to change things, you try to capture some effect, or is just this, no, because everybody's turning ESG, so I do it. And that's very very important, I would say, to try to have a simple discussion to say, what is the purpose behind your initiative? And in our view, obviously this is what we try to do, but in our view, a purpose needs to be double. You want to generate performance or outperformance, and at the same time, you want to make sure that it is linked to positive externalities on the E and the S.
So you talked a lot about sort of top-down leadership in terms of governance. Do you think there's any need for change in terms of the education or higher education systems of universities to change traditional economics and finance curriculums to make them more ESG centric and sort of get it from not only the top down, but then feeding through the youth as well?
Oh, fundamentally. I think the good news is already to see that we had a Nobel Prize in 2018 very much into the topic. So it shows that there is recognition for all the work. The second thing is the abundance of research. I think all the professors with whom I worked 20 years ago have written an article on ESG or on an ESG topic. So the academic world has totally embraced this change, which is a must, which will obviously transition from the academic world to the world of practitioners, i.e. banking and investment. What will be very interesting, and that's a philosophical question, but what we would love, or what I would love to see, is the emergence of green universities, something starting from scratch. I think today we speak a lot of transition. We want to have old brick and mortar economy to become green. But what would be very interesting is to rebuild a university or some companies really with new green concepts from scratch. And I think I came across some initiatives that they are not projects yet, but of people who want to build such universities as part of very large impact projects. Because as we know, in the SDGs, education is an important factor. And I think education, we speak of universities, and when I was preparing Rory with you this interview, this exchange, education obviously at university is important. Education at the investor level is very important. I think what we are missing, unfortunately, in the investment industry is educated investors. I think when we will have converted more investors to what we discussed today, I think the world will change faster. So there is a lot of educational work to be done at the investor level. Should be a CFA that is a green CFA or something like that. That would be quite important.
Yeah, and I think that's a really interesting point in terms of educating investors. And I think it can sometimes be a gap in terms of people's perception of those positive externalities. For example, if someone was to say, you saved 2,000 tons of carbon by investing in this company, it's not very tangible to the common person. So how would you report and demonstrate the positive impacts to ESG to stakeholders then in terms of ESG impacts?
Let's be transparent. If you want to make an impact, it's interesting because there is a lot of confusion, and we see that in the marketing of big asset managers and big banks. There is a lot of confusion between ESG and impact investing, and everybody has his own definition. So let me give you mine. I think in impact investing, you make an investment that you can directly measure. Direct measure. So this is not in liquid market. This is not because you invest, and I will not quote name, but in a liquid company on the NASDAQ, on the European Stock Exchange, etc., that you will make an impact. This is just because you will feel better, or you will have a company that has initiatives that correspond to your value. That's good. If you want to make an impact, you provide private debt to a company in Africa that is creating employment, or you can make direct investments in a new company in Latin America. This is really impact, and this is where you can measure really your impact. In the liquid world, this is more to say, I will invest with the companies that have the initiatives and the ethics I'm looking for. Where the two overlap is probably around governance. Because if you manage to force listed companies to have boards being incentivized for performance purposes, for good-looking purposes, but to have boards really strongly incentivized to do better, to do these initiatives, then you will make an impact. Because as we discussed, if a board is moving from being being a poorly governed companies, and I can give you the characteristics of our academic research. A poorly governed company is a company that has a high employee turnover. This is a company that is doing not a lot of research and development, etc. If you can change these companies in order to be better with their employees, in order to be more research and development, to have more strategic thinking, I think you will improve a lot. You will improve the company, the performance, and there will be these external positive externalities on the environment. There will be on the S, on the employees treatment, there will be these positive externalities. So that's what we believe, but let's face reality, direct measurement will be really more in private equity. The intersection, just to add to what I said, maybe what will change in the future, and we hope, but that's for the future to participate to that, is the notion of engagement. I think when we will have groups of investors that will share our vision, that when we have a company that has an ESG culture, that an ESG culture is adding to the performance, and that we can engage to change a few board members of the company, to change the culture of the company, that will generate all the positive externalities we discussed on the outperformance. That's a bit where we hope to bring the industry.
And from that, you talked about having sort of key members in the board that will sort of lead that change. Is there anything else you think we could do to help impact that? Is it just general public pressure, or do you think it's something we have to just wait and hope someone comes along, or do you think there's more impact that we could have to sort of push them along, if that makes sense?
Well, I think, if we want to solve the big problem we are facing, it's a collection of a lot of initiatives. Okay, so the dream I have is probably to have more and more asset managers that are fully or almost fully dedicated to ESG, or that shares the values. I'll just give you an example. In Switzerland, which is where we are sitting, it's a big financial centers. I think companies like us that are fully ESG, that have been created to do ESG products and so on, maybe we are 5. So there is still room to develop more boutiques, more investment firms, and I think that's it. And that reflects the need to develop more products, more solutions, and that's where we need to bring the industry. But to come back to your question, we need to have more products. More products will mean more choice. More choice will force people to be better, because more competition. And I think this is when the industry will take off. That's on the supply side, and on the demand we discussed. We need more investors. We need more engagement. There are far too many. Shall I say that? Yes. When someone in a bank told me, Pascal, I wish for my ESG team, I wish I would have the same budget as the marketing budget to say that my bank is ESG. This is today it has to be really strongly addressed on the investment side, and I think when we will make that happen, all as an industry, with the help of investors doing more and more in ESG, I think we will solve a lot. And we spoke a lot about governance. Environment is very, very, very important, and companies are conscious that making good investment in environment are very profitable. If you retrofit all your buildings as a company, your cost of energy as a company are decreasing massively. It has been proven. So many initiatives that can take place.
Yeah, definitely. And I'd like to bring it sort of back to when we were talking about the oil and gas industry. And the governance from there, when it's such a substantial change that needs to be made. How do you think we can do that within sort of methane fracking or gas leaking producers such as shale gas? Do you think things such as Climate Trace, I'm not sure if you can see in the chat, but there's a link to the Climate Trace website, which is a tool that allows you to track your carbon pollution. Do you think that using that sort of as a pressure tool, do you think that'd be key in the future? Super
important. Just to tell you, we have We know very well a company, I cannot disclose the company, where half of the board members are measuring their own personal carbon emission. So it tells you what is an engaged board, and it's an oil and gas company. So there are some initiatives. Now, you know, we discussed a lot of the bottom up. Everybody with his own initiative trying to solve. Let's look at the top down. I think we had the conference in Glasgow, but I think the governments are doing a good job. There are billions, tens of billions allocated to the transition to clean technologies and so on. So that's the first step, and it will happen, and that's our vision. It will happen if the companies do the same. So they have to work together. I would say it's like two legs. The government leg, in my view, is doing a lot. And that's good. That's not enough, but that's already something versus where we are coming from. Remember Paris conference. Remember the organizer, Laurent Fabius, the gentleman who has managed a lot on the Paris conference. It's very interesting to see how much he had to convince. I think now people are convinced, or most of them. Now it's a question now to move into execution, and the execution will happen through the companies. Governments on their own cannot make it. So this is why companies have to do it with the governments. The good thing is if you are smart on using the stimulus programs of the governments in order to implement them, you will improve the profitability as well of the company. So that's a whole industry, and personally, I hope it will emerge a new industry, new leaders will emerge, and they will take advantage of the decarbonization as a new way to build a new industry.
Would you say then that one of the key ways you can go from sort of the early adopters, as you said, with the individual companies making a large difference, to a sort of more systemic shift to ESG focus is really relying on sort of government regulation and funding? You say that's one of the main areas in which we can make that systemic shift.
It's part of the puzzle or of the equation. Definitely, at the end of the day, everybody has to. If today there are millions of people that believe in making something or embracing the change. Tomorrow there will be maybe 100 million, then it's going to move to 1 billion, and then to 2 billion, and then I think this is a collection of initiatives across all the industries. And you mentioned government, but government is one piece. If you are working for an oil and gas company and you make your contribution, you make the change happen, you have this oil and gas company transitioning to clean technology, that's your contribution as an employee, as a board member, as a CEO, as a manager. If you work in a food company, that's the same. In the presentation before on water, if you eat less meat, you make your contribution. So it's a collection of initiatives. So we represent the investment area, but it's a collection of initiatives across all the industries. So if each and every industry company makes it happen, I think altogether we will solve it. But I fundamentally believe that we will solve the big problems of our society in a bottom-up approach. The top-down, I think governments are doing most of the job. What we need is the bottom-up, everyone making his own little initiative.